Welcome to Tim Black's Strategy of the Week series. Today we're going to talk about tape reading, a strategy that works great with any market that is traded on an exchange. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of the Strategy of the Week. This is a fairly new segment, and I'd love your feedback in the comments. Tell me if this video has been helpful and what you would like to see in the future. I will still be doing the Trade Picks videos on Mondays. And today, the oldie goldie tape reading strategy. It's been practiced for many years, all the way back to the great Jesse Livermore at the turn of the 20th century, maybe even before that. This strat works well on any market that's traded at an actual exchange because it requires honest-to-goodness level 2 trade data. I'll explain all of that shortly. Also, stay around to the end of the video and I'll share a quick update on any changes in the trade picks. And by the way, I'm going to suggest you be sure your trades are well protected in the coming week. The U.S. election could cause a lot of turmoil in the market. In fact, if you've got some short-term trades on, I recommend that you just shut them down completely. If there is a mess next week, and you can be pretty sure that there will be a mess next week, and the market takes a dive, it could easily drop way past your stop losses and fill you in a horrible spot. It's much safer to be shut down and re-enter your positions later on. Okay, enough said. Let's talk about tape reading. Tape reading may also be known as time and sales, level 2, depth of market, whatever. It allows you to analyze the price and volume of stocks. This is a time and sales or a level 2 window. You can find these on most stock trading platforms. What you're looking at are three things about the trades that have been executed. First of all, the price at which a transaction went through, the volume or trade size of the transaction, and the time of the transaction. Tape reading allows you to see what is going on behind the price chart. Most traders spend their time learning to read a price chart and see where the flow of the market is going. However, a chart is only able to show you those prices and trades that have already occurred. In that sense, we're limited to the information we can get from trading technical analysis. Remember, actual time and sales information are typically only available for markets that are traded at an actual exchange, like the New York Stock Exchange, for example. Forex markets are distributed, and there is no hard and fast data about actual trade sizes and volumes that encompass the whole Forex market, so any level 2 data you get on those markets is limited. If you want to get to the roots of why the price is actually moving, you need to take a look at stock market tape reading. Due to the rise in technological development, modern tape reading also includes limit orders. These orders are non-executed trades that are resting on the order book. With this comes a deeper level of information on what's really going on behind the price action. For example, if you see a big buy limit order at a certain price, it can suggest the price may find support at that level and bottom out. Or if you see a large sell limit order on the order book above the current price, it may suggest the price may find a resistance level where there could be a sell-off. Here are a few tips on how to trade the tape like a pro. First of all, use a size filter. You'll find that the tape moves pretty fast and it can easily be filled up with a bunch of tiny orders. To avoid this, filter out the small orders that show up on the level 2 data window. In addition to that, use tape reading in conjunction with the price action on the chart. Typically, professional traders only use the tape as a confirmation tool for entries and exits. Reading the tape can be extremely helpful if you're a day trader looking to catch short-term moves. We can view tape reading as one of the most effective indicators for active day traders. The second reason you would want to use tape reading is to make a quality risk-reward strategy. Thirdly, tape reading acts as a trend-leading indicator as it shows who is buying and selling and what prices the big boys are eyeballing. And last but not least, level 2 is a window into what the smart money traders are doing. You know, the big boys. They're the ones that are actually moving the market. We small retail traders just don't have the buying power to alter the price like that. Now, I mentioned earlier that the Forex market can't provide functionality like the level 2 because it's an over-the-counter distributed market. But don't despair. You can always use the money flow index indicator to get an idea of the interaction between smart money buying and selling on various currency pairs. Let's talk about what it takes to use tape reading in your overall trading strategy. Tape reading traders need to look for certain clues on the buy and sell side orders. For example, if you want to buy stocks, here are some of the things you need to see on the tape. First of all, you should see the bids stepping up. The bid is the highest price someone is willing to pay for a share, and it represents the demand in the market. The ask is the lowest price someone is willing to sell a share and represents supply in the market. If the bids are stepping up, it suggests demand is increasing, which eventually will cause the price to climb. Next, you should see most trades executing on the ask price. Right now, a lot of orders are coming from the supply side of the market. Eventually, the supply side will be empty. Then you should see big orders showing on the ask price. With big orders at the ask price, the price is unlikely to drop because shares will immediately be taken up by those orders. Buyers holding the bid. Buyers are holding the bid as sell orders are starting to get thin. Reduced volume at the ask price suggests the supply is getting slim. Whenever supply goes down, price goes up. Price spoofing is where a seller is offering a large volume at the ask only to cancel it at the last second, making it appear to be a transaction and scaring potential buyers that there is a dwindling supply of the stock. A lack of downticks. A downtick is where a trade is executed at a lower price than the previous trade. This also suggests that supply is drying up. And lastly, you should see time and sales accelerating with the price holding firm. In other words, lots of orders are firing off without the price dropping. It's definitely time to jump on board. Obviously, of course, you can just reverse this whole scenario if you're looking for a sell setup. Understand that we're using tape reading for confirmation of an entry after we have spotted a tradable setup. We want to make sure we have good risk to reward trading opportunities before we read the tape. In summary, if you want to improve your tape reading skills, spend as much time as possible studying the tape and how the stock price reacts to different scenarios. Don't get frustrated, as it will take you some time to develop the skills to read the tape effectively. Remember, you may take a few weeks or even months learning a new skill, but then you've got that skill to use for the rest of your life. We use tape reading as a confirmation trading tool and not as a standalone trading strategy. If you're a day trader or a scalper, tape reading can provide an extra edge over the trader right next to you. And that's it for this week's Strategy of the Week. Let's take a quick look at the significant trade picks. I trailed the stop to 12,785 on Bitcoin, locking in 1944.27. I'm going to hold the stop right here until this consolidation that's forming clears up. I am going to hold on to my Bitcoin through the election cycle because I've got a huge amount of profit here, and if Bitcoin shoots up, we'll get a whole bunch more. If it drops, even if we get a bad fill on a stop out, it still won't be too bad. We got half off of this Australian dollar, Swiss franc, and then the price marched right up here and hit our break-even stop on Tuesday. So I'm done with the Aussie Swissy for now. The US dollar Japanese yen pushed down a couple of times now since we started looking at this, and it looked like it might give us a signal this week, but it's pulling back right now, so I'm not sure that it is. I'm looking at it right now on Thursday afternoon, and I've gone ahead and I've redrawn this range down to 104. If this closes below 104.50 and you enter this trade before you see this video, I don't think you'll be in a bad spot. For safety purposes, I'm moving the range down to 104. All eyes on the Canadian dollar Japanese yen, attacking the bottom of the trading range right here. and the US dollar, Canadian dollar attacking the top of the bull flag right here. Keep your eyes open for a respective sell and buy on those two pairs. And lastly, crude may give us a signal today or tomorrow. It's pulled back an awful lot and made a pretty long wick here, so it may pull back behind here before the market closes, but we'll keep an eye on it. And that's it for today's video. Be sure to come back next Wednesday at 3 p.m. as we continue to discuss technical analysis in our trading education series. Don't miss my trading pick of the week on Mondays and my strategy of the week on Fridays right here at Trading Strategy Guides YouTube channel at 3 p.m. U.S. Eastern Time. Be sure to subscribe and hit the bell so you'll be notified when these videos come out. Aren't we looking forward to next week here in the U.S. when we find out who our next president will be? Have a great weekend, and I'll see you with a trade pick on Monday.